The local bourse was on the slide all session. China's slowing manufacturing sector adding to investors' woes. I spoke a little earlier to Michael McCarthy, Chief Equities Strategist at CMC Markets. Well, Michael McCarthy, a steady decline through the day. Was that a bit unexpected?
To some extent, yes. We had some negative leads from overseas markets, and some local traders and investors were disappointed by the announcement from the US Federal Reserve overnight that it wasn't considering buying any more assets in the market, injecting cash into the global system. So we were expecting a slightly negative day. However, the fall and the consistency over the course of the day was a bit of surprise. The ASX 200 index finishing down by more than 1% on the day and near its lows. And adding to today's woes was a reading of the flash PMI out of China. That suggested that manufacturing conditions in China remain weak despite assurances from central authorities that they would stimulate their economy. That, of course, is bad news for Australian commodity stocks in particular. And once we strip out the futures expiry volumes that occurred at the open this morning, for the fourth day in a row this week, we had very weak volumes, suggesting that most investors remain on the sidelines.
Well, we better have a look at those media stocks in play. How have they fared in the last session?
Well, they're a clear focus for the market at the moment. The media stocks have been facing both cyclical and structural issues, and we've seen a number of responses to that over the last 2 weeks. Fairfax is cutting jobs and shutting newspaper printing operations. News Corp is restructuring, and then we had a number of bids, with News Corp looking to take out Cons Media at $3.50 a share, a big premium to the $3.03 it was trading at previously, and clearly they're looking to take full equity in the Fox Sport generating Premier Media Company and the Foxtel investment itself. Overall, though, we also had APN making a bid for a retail site, Exclusives Brands, and it does appear that there's a real strategic focus in the media sector at the moment.
And I also see Billabong International has attracted criticism as it launches a heavily discounted capital raising. What do investors seem to be upset about there?
Well, there's a lot to be concerned about here. Billabong shares peaked pre-GFC at $18 a share. At the close yesterday, they were $1.83, one-tenth of that price, and yet the company has announced a 6 for 7 entitlement offer at $1.02. That's a record low for these shares and a real concern. Now, we've seen a change of CEO at Billabong just 6 weeks ago. Today, we heard the chairman will be stepping down later this year, and the head of the audit committee is also stepping down. And the big concern for investors is that Billabong doesn't seem to be addressing the strategic issues that have to do with its brand, and has come to the market for a capital raising without laying out any strategy to address those issues.
Michael McCarthy, thank you very much for joining us.
Thank you.